Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you this week.
Mike, you said just before we went on the air, you're getting messages from your customers saying they're scared and they're wondering what's going on in the markets right now.
Well, these people are worried about the gold and silver markets because, gold hit $15.50 an ounce at the beginning of this month and pulled back. And we saw the gold stocks pull back too. GDX, for example, fell just about 10% from its high. And there have been a lot of people out there saying that this move represents the start of the type of decline that happened in 2016 in the fall, because that year there was a good rally in gold and the mining stocks, of course, and then they just fell in the fourth quarter substantially, and it's taken 2 years for them to base and then do what they've done this year. So people are very worried about that, and I've been making the argument that this is not the same thing at all, that what we're really seeing is just a pause and a consolidation in the metals market, much like we saw in June and July when gold hit $14.50, then came back below $1,400. And the things that make me say that is that the action just isn't the same as it was at this time of year in 2016. Gold and silver were below their 50-day moving averages at this time that year, and then they broke at the very end of the month. But they're acting stronger than they were then. But more importantly, so are the mining stocks. In fact, the mining stocks really topped out over about 6 weeks and then rolled over in 2016. And by this time of that year, they were all trading below their 150 and 200-day moving averages. At this time, as we're speaking, they're substantially above those levels. In fact, some of the mining stocks are right on new highs today. So those are very important things, because the first one is the price structure is different. But the mining stocks tend to lead the action in the metal. They formed a top for over 6 weeks and rolled over in 2016. They were already in downtrends by now. And this year, many of them are on new highs. So to me, the price action is bullish, and it's all backs up the thesis that this is a pause, a consolidation. I can't predict if it's going to last a week or, a month or two, but the best mining stocks will break out ahead of the action in gold and silver anyway. And I think that's what people should focus on, trying to buy the best ones. But with the Commitment of Traders report, that's the one big thing that I got a lot of emails in response to me, writing these kind of bullish things, in which they were saying, hey, look, the Commitment of Traders report has a new record short position among the commercial hedgers and producers. And, that's not good. These people are pointing out, so what's my response to that? And these aren't all people simply trying to bet against gold. These are some people that I know that are in these markets, and, the dip and what they're hearing other people say is really discouraging them, and I'm afraid may make people sell out when they shouldn't be. But my answer to that is that that's a function of what's been happening in the financial markets now, really since 2008. There's been an increase in trading volume across the board in all markets, primarily coming from hedge funds, computer programs, and so forth. But it's also happening in the futures market and creating new records being broken and not leading to anything important. So, for example, the U.S. dollar index, since 2008 has made, record short positions among the commercials multiple times, and only gone up even more after that happened. So I don't think this is an indicator people should pay that much attention to, when it comes to the gold market or the silver market. Instead, look at the overall price trends, look at how the mining stocks are doing compared to gold and silver. In fact, the really big, critical, important tops have come when gold and silver have gone up and the mining stocks have failed to go higher. That happened for almost an entire year in 2011. And again in 2016, the mining stocks lagged the price action of metal for about 6 weeks. So none of these things are happening, and people shouldn't be so, at some point you gotta just trust what the markets are saying. And unfortunately, I really think it may take gold going through 1550 and breaking out, silver making a new 52-week high, to finally make these type of bearish arguments fall to the wayside and people not to be so worried and shaken up by the day-to-day action in these markets when it comes to gold and silver.
Is that because gold fans in the past have been burned several times?
Oh, it definitely is. I mean, it's the memory of that 2016 action in which there was a sizable rally, and then it all fell apart. And then since then, up until really this June, that 1350 level had been a lid for quite some time, and we rallied up to it and failed, rallied up to it and failed over and over again. Finally broke it. So it's the memory of all that happening, and people don't want that to happen again. In fact, I get another email this morning about an individual stockless person owned, and they said in there, I don't want this to happen again like it did 2 years ago. So that's definitely what it is. And of course, people who were involved in these markets even longer than that, we had one of the biggest bear markets in anything you could possibly have in the mining stocks from 2011 to 2015, in which they fell about 90%, all of them. So that's a tremendous bear market. But the good news is that bear market caused such a significant price collapse that it has created what I believe is an incredible window to buy mining stocks at still extremely cheap levels. So at the beginning of a mining stock bull run, which I think is what started here in June, the big cap mining stocks tend to go up first. They've done that, and the juniors tend to lag and then come alive. And now we're starting to see individual junior mining stocks break out, really starting in July, and they're so cheap for the most part. I mean, you can find many with market caps under 5 million, 10 million that they didn't even really pull back at all when the GDX pulled back 10%. They're just so cheap. And I think it's an incredible opportunity, to build positions there. That's personally what I'm doing. I already bought positions in big cap mining stocks and not jumping in or out of them. I completely ignore these crash callers and just hold what I got. But I'm looking to add more by buying small caps that are cheap values with the notion that I may be able to hold them for a couple of years. And I'm not looking to buy, exploration junior mining stocks when they got market caps of 30 million, but want to buy now when they got market caps, under 10 million, some even under 5 million.
We'll have more with Mike Swanson right after the break.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, you've mentioned in the past that as much as we're talking about gold stocks and gold miners right now, how popular are they among the most popular stocks?
Well, they're kind of at the bottom of the list. For instance, I track something on Robinhood, which is one of the most popular brokerages, fastest growing in the United States online, and they offer free commissions. So many millions of small traders have accounts with them. They show you a list of the top 100 positions on there, and there's not a single mining stock on the list. Many marijuana stocks, and some stocks that went up sharply at the beginning of this year, such as General Electric. I suspect they're American investors that sold laggards like Apple and started chasing GE and seeing these marijuana stocks in the first quarter. So those type of momentum plays, you could say, that were big earlier this year, now not so big, but people are just holding on to them. It looks like a lot of people got into them then, but that's okay, and I think that's part of the opportunity in getting involved in this sector now is, the individual investor isn't really in it, and like the marijuana stocks, they can start to get in and drive something up for a couple years. So that's kind of what I'm looking forward to happening, and why I think it's such an exciting opportunity, really a window of opportunity. Maybe it'll last 6 months, 12 months. I think as long as gold is below 1,700, we can still find these cheap junior mining stocks. And the beauty of them is when they break out of one of these consolidation bases, they seem to just jump up 30% in a day or over the course of several weeks, go up 50%. Without really even having a pullback. And this is the type of action, you don't really see except at the very beginning of a bull market, in a sector. So it's quite remarkable. And, I don't know when, after gold goes to 1,700, it's going to be harder to get those type of quick returns as are materializing now.
We'll have more with Mike Swanson right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, how is the U.S. dollar doing?
Well, it's hanging in there. It's kind of it's funny because I've seen many predictions for a dollar collapse and other predictions for a dollar rise. There are people that are bearish on the stock market and the global economy who kind of think the dollar can skyrocket like it did in 2008. And others, would say it's going to collapse because of the funding problems the U.S. may experience down the road. Now, I'm one of those people who believe eventually there will be funding problems in the United States in regards to government debt, corporate debt. But I think we're a couple years off from that happening. And the reality is the U.S. dollar index, as we're speaking, is almost at the exact same place it was at the end of July and at the end of May and at the end of April. It's gone up or down like 3%, in a range sort of, but it's really not moving very much overall. And that's probably a testament to, weakness in the euro, other economies around the world slowing down. So it hasn't really, seemed to have had a huge impact on the metals markets or much of anything else, when it's had these little spikes up that seem to be temporary. So it doesn't seem like much is going on, and, maybe next year we'll see the dollar really do something, but so far it just seems to be locked in this narrow range, and that can last a long time, in a currency market.
Has nickel been the surprise of the year? Everybody focuses on other battery metals like lithium or cobalt, but what about nickel?
Yeah, nickel has had its ups and downs for sure. Interestingly, the nickel stocks have been weak, and so have copper stocks. Going into August, they kind of fell with the stock market when it dropped in, and even today, as we're speaking, they're down again, with the Dow and the S&P 500 down. So to me, they're not really trading at this moment, with the action in gold and silver, but are more linked to the overall picture of the global economy, which this year seems to change the minds of stock market people from month to month. Last month, we saw a little bit of a dip, as an interest rate spiking up, and then we bounced. Now we seem to be going back down. But, so, I think that gold and silver are the commodities positioned to go up first, and in the metals world, that's typically what happens, and then the other metals eventually follow suit, and soft, commodities, also. So I think that's the case in what we're likely to see going forward in the next, couple months and couple years.
Is a sector to look at a combination of alcohol along with the cannabis market? Well,
a sector that I'm interested in as a safety play, in one way, the alcohol and marijuana markets are a little bit different. I think the marijuana market is still a very speculative sector in the stock market, much like the gold stocks, lots of, penny stocks, so to speak. And at this point, the big cap marijuana stocks, they've been falling this year. I mean, they had good rallies in the first quarter, attracted lots of momentum players. But as we're speaking, Aurora Cannabis is down almost 50% from the high it set in March. Canopy Growth is also down at 25, below 25 when it was at 52 in May. Tilray also in decline, substantial. It's been falling all year. So I think kind of the buzz, no pun intended, for that sector is fading away, with some action still in some small caps, but the giants of the sector, not so much. Alcohol and tobacco are more like defensive plays. People think they're, insensitive to changes in the economy. And so I think that's a sector tied to defensive action, sector rotation in the stock market. And another one like that is the REIT sector, which has also been a top performing sector in the market. I would say after the precious metals markets, or gold and silver, people been flocking into that ever since December to get the dividends, that REITs pay as long as interest rates in the United States, have been going lower. But that's something at some point I would like to buy myself. But the problem I have with that sector is it's also tied to the action of the stock market and the real estate market. If we have recession, REITs will suffer in the first half of that. So I'm just being very patient with that. I'm portion of my money. I'm just basically waiting, to use in the future.
Mike, anything else we should be keeping an eye on right now?
Well, I'll say the S&P and the Dow, they're in a sideways range still. We dipped towards the 200-day moving average in August, bounced back above it. So I think, I don't know, which direction we're going to go. Are we going to break out before the end of the year or go through the 200-day moving average? I don't know. But I'm watching that for the ultimate resolution, and the real move may begin 2 weeks from now, because that's when these Chinese trade negotiators are due to arrive in Washington for a trade conference with the Trump team, and we will see, will we get a trade truce or not? And I'm not trying to bet one way or the other, but I think the answer to that question will spark the next meaningful move in the markets, and I'm not looking for much to happen until then. So I guess we may find out maybe by the next time we're speaking. That could be breaking news.
Mike, thank you so much for chatting with us.
Oh, great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.